advogado on behalf of YIN Chile and also of the YIN Committee, Central Committee, to say a few words. Thank you all, and I hope you have a good event. Thank you.
Thank you, Joao. And this is just an opportunity to say I'm so happy this event is taking place. Definitely IFA needs a little more YIN happening. We are doing great stuff. Just this year, we had a regional event where Chile and Brasilia participated in the regional YIN event where the topic was YIN Goes Green. We had Francisco Moreira from Brazil and Sebastián Martínez Conde from Chile, both with a great starring role in the event. And then the global event, where we also had friends from the Americas, Luciano Gatia from Argentina and Bubana Rai from Canada. So definitely, on behalf of the Global YIN Committee and my boss, Claudia Sutter, we're super happy that this is happening and encouraging all the branches that may be watching this to do their own events within their own countries, or maybe something like this, a joint event, because I'm sure it's going to be a terrific opportunity. So congrats, and let's head on. Luis, Eduardo.
Thank you, Inácio. Thank you, João. Hi, everyone. Good evening. First, I'd like to introduce myself. My name is Luís Eduardo Maneira. I'm a Brazilian tax lawyer. I'm honored today to chair this event produced by YIN IFA and to have the opportunity to learn with my Brazilian colleagues, Paulo, Honório, and Thiago Machado, and our Chilean friend, Maria Paz de Carcer and Jonathan Israel. Well, the purpose of the event is to discuss the future of taxes in Latin America, addressing two main topics. We will begin debating taxation of natural resources, especially the taxation of the mining industry, and then we will examine wealth management, offshore companies, CFC rules, and tax treaty provisions. So without further ado, I would like to thank João Rafael, Inácio Jeppe, Eduardo Muniz for the invitation, and welcome my friend Paulo Honório, who is one of the most well-known specialists in Brazil when it comes to mining taxation. He's a tax professor, PhD candidate for the very prestigious University of São Paulo, and partner of William Freire Advogados. I also welcome Maria Paz de Carcer, who is an associate at Cariola and master in law for the Northwestern University, who will give us a Chilean perspective. So Maria, Paulo, take the floor, please.
Thank you, Eduardo. We're gonna share my screen right now, so you can all see. Let me see. Is everyone looking at my screen? Yes.
Yeah,
okay.
Fine.
Okay, great. So at first, when we were invited with Paulo to this panel, we were talking about what is the future of taxation on natural resources. And as Eduardo said, we were focusing on mining. And why the mining industry? Because it has a great comparability between Brazil and Chile. We both tax the mining industry with corporate income tax and royalties. And it's one of the industries that provides most of the GDP or has an important contribution to the GDP of each country. And also because lately on a political level and legislative level in both countries, we're seeing an ongoing nationalism regarding natural resources, water, land, mines, etc. So we thought it was important to just touch base on what are the current ideas that the different countries have on how to tax the mining industry, that it has proven to be hard to tax in regard to getting the right rate and the right tax burden overall, right? So regarding the Chilean mining industry, Chile is one of the world's largest producer of copper. It's home to 7 of the 15 largest copper producing mines in the world. And it also has a non-metallic industry that is also a top producer. One of the important things, or one of the particularities that we have in Chile, is that we have a permanent nature of the mining concessions. Yeah, so we don't have like a kind of use it or lose it provision. So you can either have the exploration rights or the exploitation rights regarding a mine and not use it for a long, long period of time, and the state won't forfeit those rights, okay? Paulo?
Thank you, Maria. Good evening, everyone. It's a pleasure to be here at this event. Well, Brazil, as Maria just said, has a strong mining sector. It is a strategic sector, which corresponds to a great percentage of our GDP. And we have one of the greatest potentials in mineral resources on the planet, with at least 55 types of exploited minerals. And the mineral concessions in Brazil are granted for indefinite period until the depletion of the deposit in this first come, first served policy, which in Brazil we called priority right, but basically means that the one who comes first gets it. And I think Maria just said very well that we have a great opportunity here to compare these two mineral taxation regimes. Despite their differences, we have a lot of similarities. I think it will be great to approach that.
Mm-hmm. Okay, so this is on the benefit of my non-Chilean participants. So how the tax system works in Chile is that we have a partially integrated regime, okay, where the corporate income tax is credited against the withholding tax when the revenues are distributed to the foreign investor, for example. In Chile, most of the companies, except for Codelco, are foreign investment, okay, in the mining industry. So that's why the withholding tax that is applicable to dividend is really relevant, okay? This is a tax reform that started in force in 2018, the latest one, fully. And we have this partially integrated regime in which you can use part, just a 65% of the corporate income tax to credit against your withholding tax. But the system is fully integrated when the foreign company, the foreign investor, is domiciled or resident in a country in which Chile has a double tax treaty, okay? So we have this dual kind of system. So we have those countries that have a double taxation treaty with Chile and those who doesn't. Those who doesn't have a 44.45 overall tax burden, and those who have a 35% tax burden, okay? We also include Arabia Saudita and the US in these kind of countries that have a double taxation treaty with Chile, even though we don't have a double taxation treaty signed with them, but we did give them like a time until 2024 to get those treaties signed to be able to have this benefit of have the fully integrated system, okay? We also don't have a special tax regime for the mining industry. We have the same rules regarding VAT and the regional contributions, and we do have an accelerated depreciation method of 1/3 of the life of the assets. But this depreciation method is for all of Chilean industries. So it's not special for the mining industry, but it's relevant for the mining industry because, as we know, the mining industry needs a higher contribution of cash in order to get the exploration and the exploitation going. So in Chile, we have, as I said, this, the corporate income tax, and we also have a specific tax on operating mining income. We call it a royalty, but it's not actually a royalty in how it was created. Okay, this has like a political history. This specific tax was incorporated in the mining code and not in the tax code or in the income tax law, because we didn't have, at the time, the government didn't have the votes necessary to put together that reform, but it did have the votes to change the concession law on mining So that's how the specific tax on operation minor income came to be, okay? So this specific tax has rates that vary on the amount, depending on the amount of the annual sales and the mining operation margin of the taxpayer. So if the annual sales are inferior to 12,000 refined copper tons, then it's exempt. If the annual sales are higher than 12,000 and lower than 50,000 refined copper tons, then the rate is between 0.5% and 4.5%. And if the annual sales are higher than 50,000 tons, then the effective rates varies between 5% and 14%, depending on the mining operational margin. So in here you have like two pieces moving. So you have the annual sales regarding the refined tons of copper, and you also have the mining operational margin. And the mining operational margin is the ratio of the net operating mining income divided by the mining revenue. So this is actually what makes this specific tax to not get as high revenues as it should be, okay? Or as the political idea of how much specific tax on the mining income should produce for the IRS, okay? One of the particularities of this specific tax is that it's deductible for corporate income tax purposes. And if you can see in the chart on your right, you're gonna see the differences between the nominal rate and the effective rate, okay? And you can see that at the beginning of each project, so the effective rate is gonna be the orange one, and the nominal rate is going to be the red one. So at first, when a project is starting and you're starting exploration and exploitation, then these rates are going to have a greater difference. But later on, when the exploitation is underway and you're like halfway through the project, then these rates start to come closer. As you can see in here, it's like between 2010 and 2014. So in that regard, we have only temporary differences between the nominal rate and the effective rate, okay? One of the particularities of the Chilean mining fiscal system that is one of the reasons why Chile is one of the top producers of copper and other non-metallic industry is that we had something that is called the Tax Invariability Agreement, okay? For a long period of time, we had Decree Law 600, that is, it was the Foreign Investment Statute, in which the Chilean state would sign a contract with the foreign investor in which it would provide certain guarantees for their investment. One of the guarantees was this tax invariability, in which investors are entitled to elect for a 10-year period, and you can extend that 10-year period to 20 years in mining projects that are over 50 million US, from the beginning of their operation, to subject their operations to an effective overall tax burden of just 42%, okay? That includes the withholding tax. So including in that 42%, you will have corporate income tax, specific tax on the mining income, and withholding tax, okay? Now, since December 31, 2019, we are not signing, the Chilean state is not signing any more foreign investment statute contracts, foreign investment contracts. And we have a new kind of foreign investment agreements in which the tax invariability is not included, okay? But if you see on the right hand, you are gonna see the different companies that are actually subject to tax invariability and to what year, until what year. So for example, you have Anglo American until 2023. You have BHP until 2032. So that's a lot of time in which you are not subject to the changes on the law, of the tax law, the mining system, etc. So right now, as you know, we are having our second round presidential election. And this is one of the issues that has been hot, like a hot topic right now. Why? Because we have a royalty bill waiting on the proposed amendments by the Senate that's going to go just the day like before of the presidential election. And this, it's proposing this royalty bill is actually a royalty bill, and they're proposing a revenue-based royalty to be applied at a flat rate of 3% when the copper pound is at $2, and an additional rate between 15 and 75% when the copper prices are higher than $2 okay, $2 a pound. So just to be like to put it on practical ways, you can see here the base case. That is what we actually have today in Chile for the overall tax burden. Okay, we have for the low operational cost companies, when the copper pound is sold at $3, then our overall tax rate is 38%. Okay, this includes withholding tax, the specific tax on operational mining income, and the corporate income tax. Now, when the copper is higher on its value, let's say 4.5 US dollar, then our overall tax burden is 39 and 40%. So as you can see, for most companies, the tax invariability is not a good, it's not a good deal, because actually the tax burden is lower than the tax invariability of 42%. And so on, the companies can elect to not use the tax invariability and be subject to the general tax regime, okay? Now, with this proposed tax, this proposed royalty, the tax burden overall will increase to an 80% or a 65% when the copper is at $3, and to 97% and 88% when the dollar, I mean, the pound of copper is at $4.5. So as you can see, if this royalty bill would to pass and become a law, then we can forget about the mining industry in Chile, because we're not gonna have any investor that's gonna wanna invest 50 million in a new project, mining project, and have an overall tax burden of 80, 88, 97%, okay? There are some suggestions that this new royalty may replace the specific tax on operational mining, but it's just a suggestion, and we actually just don't know yet. But this is what we are up against right now, okay? And just to finish up and give the word to Paulo, I was just talking about this second presidential round. So what does our candidates think about the royalty bill on the mining industry? So Jose Antonio Cast, that is a far-right candidate, it's for not increasing any tax on the mining industry, and he's actually proposing to lower the corporate income tax. And he's worried about the clear and transparent rules that investors need to invest in Chile. So all of his proposals are on that regard, bringing more foreign investment to Chile. On the other hand, Gabriel Boric, that is a far-left candidate, is proposing a new royalty that is not the same royalty that is actually in the Senate, but this royalty would be progressive and would care for the small mining industry, thinking that the small mining industry is actually Chilean companies that have these small operationals, okay? But one of the advisors, we don't know whether he's gonna listen to the advisors, whether his advisor is gonna be on its government if he is elected president or whatever. But he says that he's not interested in overcharging with taxes the mining industry, but he is considering eliminating some investment exceptions and some beneficial regimes. For example, the accelerated depreciation ban. Okay, so that's the overall scene of the Chilean mining industry and the new laws that are going on. Go ahead, Paulo.
Thank you, Maria. Congratulations. Very interesting presentation. In Brazil, we're not there yet, but we're going the same direction. Well, we can say that the Brazilian mining tax regime is mostly based also as Chile on income taxation and on a royalty system. And that is because there is no VAT levied on exports in Brazil. So mostly these are the two main taxes, let's say, that levies on the mining industry. So starting with the income tax, there are some alternative taxation regimes in the country, but in general, mid-size and large companies are all taxed at a nominal rate of 34%, which levies on fiscal profit, and that is an accounting profit after going through certain adjustments. The Brazilian nominal rate, as you see, is very high. It's the 5th highest in the world, and that naturally leads to an economic incentive for tax planning, especially in the international level. And that tax planning usually relates to thin capitalization and transfer pricing. And unlike Chile, which Maria just told us has a tax benefit of accelerated depreciation for mining, there are no specific incentives on corporate income tax for mining in Brazil, okay? But there are incentives for business projects in the poorest regions of the country, notably northeast regions, as you can see in the map, which can lead to a reduction in the effective income tax rate to something like 15%, a bit less, a bit more, okay? And this is a point of attention regarding the BEPS Pillar 2, which deals with the global minimum tax, as there is some doubt whether these tax incentives, which aims at the development of these poor regions and fulfilling a specific rule in the Brazilian Constitution, could have its effectiveness minimized by some rules that arises from international tax treaties. Okay, so we don't know if BEPS Pillar 2 will have some kind of rule that affects this effective tax rate, which is really low for the Brazilian nominal rate perspective. And about foreign investments in mining, those two projected figures illustrate both the debt instrument and equity financing, okay? So starting with equity, we have a difference in relation to the Chilean model. The Brazilian system brings total fiscal neutrality to the model by not taxing dividends at all. But we are also prohibited to deduct the payment of dividends in corporate income tax. So it's neutral. Another difference is that taxation, there is a taxation of foreign direct investment by a tax in Brazil that is called IOF, which is the Brazilian tax levied on financial transactions such as exchange transactions, and that is levied at 0.38%. There's also an incentive to the tax deductibility of the goodwill that is normally registered in the Brazilian holding company if it makes an acquisition with unrelated third parties. And that point is very relevant in Brazil from a financial point of view, because in general, goodwill has a high value in these kind of transactions and is also a matter very disputed among the IRS, the Brazilian Receita Federal, especially because this Brazilian holdco that is projected usually is understood by the IRS just as a vehicle of the investment And so IRS usually states that it doesn't have any substance, and in that regard, it couldn't deduct any goodwill. Okay, so that structure is very, very important when you talk about financing a mining project by equity in Brazil. The investment model for debt instruments, of course, is not neutral, although the remittance of money here is not taxed by the IOF, differently from the equity model, okay? Interest payments to the foreign investor are taxable at 15% withholding tax. And as Maria said, in Brazil, we also had that same reality. Depending on the investor's country, that withholding tax may be deductible because of the double tax treaties, okay? But these withholding taxes must be economically confronted with a possibility to deduct the payment of interests to the foreign investor at 34%. Okay, so what we have here, an incentive for thin capitalization, right? And that is why in Brazil we have thin capitalization rules that do not prevent this kind of tax planning, right? So this is a very common model to finance mining projects in Brazil. Usually they are mostly financed by debt instruments. Mm-hmm. And this is being closely watched by the OECD with other institutes such as the IGF in the debates that are going on due to the BEPS project, okay? You can pass to the next slide, Maria. As for royalties, the Brazilian constitution says that only the federal union could create them, okay? However, due to this resource nationalism that we're talking about, as of 2011, several Brazilian states are starting to create their own mineral royalties, okay? So the federal royalties are almost entirely transferred to the states and municipalities in the proportion that is indicated on the slide, which makes them very important instruments for the development of the local mining activities states, you know. And they're levied both on the sale of the ore or on its industrial transformation that is called ore consumption by the Brazilian law. In the first case, the calculation basis is gross revenue less taxes. And in the second, it can be a value fixed by the government, by the National Mining Agency, calculated on the cost of production or on the market value of the ore. The rates, as you can see, vary from 1 to 3.5%, depending on the type of the mineral. The highest rate being on iron ore, for the reason that this is the most lucrative business in mining projects in Brazil. And the standard rate is 2%, okay? State royalties, on the other hand, are not levied on revenue, they're levied on volume. They're unit-based royalties. And the states actually collect more from these royalties than from the transfer from their share of federal royalties. Therefore, we have great expectation around the judgment that the Supreme Court will make regarding the validity of these states' royalties. And you can go to the next slide, Maria. The federal royalty model that I just presented to you was defined by this law, 13540 from 2017, which is a recent law that has increased the federal royalty in a significantly way. As you can see, from 2017 and beyond that, the collection of this royalty has more than doubled. And this law is also under judicial dispute regarding its validity. Although these state royalties and the 2017 law, as I said, are already some instruments that characterize what we're saying here about resource nationalism, we have several other important bills on the way in Brazil, such as Bill 2337 from this year, that was greatly debated by tax lawyers and the tax academics in general, that intended to reduce the income tax rate from 34 to 26%, because, as I said, Brazil has the 5th highest nominal tax rate in the world. And on the other hand, the project intended to tax dividends remitted abroad, as Chile does, as well as increasing the federal royalty by 1.5%. This bill actually was approved by the chamber this year, but it was rejected by the Senate in November. And since the bill was rejected by the Senate, and there is a great appeal, as we know, in the National Congress to increase the tax burden on mining, this bill 4199 was presented at the end of November, on the 29th, which conveys the same proposal to increase the royalties by 1.5%. We think here that the chance of approval of this bill 4199 is moderate, because at some point the mining companies know that there will be another raise in federal royalties. And there are also proposals to revoke the state VAT immunity on mineral exports. We have a remote chance of approval. They are all the time in the political debate, but there is a consensus that this is not going to be approved. And unlike Chile, there are no projects in Brazil related to fiscal stabilization agreements, invariability agreements. And I think this instrument could be very interesting for Brazil to provide greater legal certainty to investors, considering that the Brazilian tax burden is already very high, as we saw. And although we do not have these instruments here in Brazil, we have a legal dispute that is kind of similar, that could lead to a similar effect, actually, regarding exclusively the federal royalties that were increased in 2017, as I said. Miners defend that the new law could only apply to future mining concessions because of the principle of legal certainty. And that is a practical way to say that there is like a fiscal stabilization because of the concessions that are prior to the new law. So these are my considerations. Maria, if you want to comment something else, feel free. And I appreciate everyone's attention.
Thank you everyone for their attention. I think we're on time to give way to Jonathan and Tiago.
Thank you, Paulo. Thank you, Maria, for giving us a great overview of Brazilian and Chilean taxation of the mining industry. As Paulo said, as Brazilian economic crisis deepens, the more governments question the VAT exemption on exportation, especially in mining resources. And I'm a bit worried with the scenario that the Chilean scenario that Maria gave us. It seems that the tax burden in Chile is much higher than in Brazil. But it's time to move on to our second topic, where we will be discussing wealth management, TFC rules, offshore companies, tax treaty provisions for this strict task. Let me introduce you to Tiago Machado, who works for the Bow Corporation, and to Jonathan Israel, Master of Law for the London School of Economics and lawyer at PwC. So Tiago and Jonathan, please, when you're ready.
Thank you, Luis Eduardo. Thank you, everyone, for the invitation. So when we were discussing with Tiago how to approach this very broad subject of wealth management taxation, there is a specific trend in the Latin American region in general on trying to address the taxation of wealthy individuals, and that is kind of the starting point of our presentation. So there is a context in Latin America that since the pandemic, there's been like like a resurgence of these capital levies or this taxes on the super rich. So there have been like several countries who either approved taxes on equity or taxes on wealth for certain individuals, and those that didn't get to the approval of those taxes do have they do have either a bill in Congress or some form of proposal to try and grab the tax from wealthy individuals. And the economic constraints of the pandemic have led to very different cases, various types of taxes on wealth, and some the success of most of them is still a controversial thing. The case of Argentina is paramount. They implemented a very grievous tax on wealthy individuals, and the expected return from this tax has not been what the authorities had in mind when they enacted the tax. So as Chileans, we don't want to stay outside of this trend. So even before the pandemic, with the 2020 tax reform, which, as Maria Paz stated, was started to be discussed on 2018. A first attempt on grabbing some portion of the wealthy individuals was incorporated into our law, and this is what we call the surcharge on the real estate tax, which is a tax applied over the real estate tax in those individuals who have an accumulation of real estate that in its value is over 500,000 USD approximately. It's the price value in yearly taxable units, and this is applied on a scale, in a progressive scale. So so 500,000 K on real estate is in context it's not that much, but the rates begin to increase when the progressive levels of the progressive rates start to apply. So this is a very special tax because applies for general reference. Real estate tax in Chile applies over the value of a given real estate, but this needs to be applied at the level of the taxpayer who owns or has in his name the sum of real estate assets. So it's kind of a surcharge, but it applies on the individual who accumulates a sum of real estate. But we as Chileans, we did not stop there. So once the pandemic hit, a group of deputies from the lower chamber of Congress started a proposal to set forth a capital levy, a one-time capital levy, to high net worth individuals. And this was a very, they had to find, I'll call it a loophole, just to try and set forth a tax in the Constitution, because in Chile there is an exclusive prerogative of the President of the Republic to set forth initiatives, bills that relate to taxes. So the way to circumvent the application of this a constitutional constraint on who has the authority to propose bills on taxations was instead to propose a bill, a tax bill, because the deputies do not have the power to propose a tax bill. They proposed a transitory provision as a constitutional reform. It was, let's say, it was one article long, and it was very from a technical standpoint, it was very incomplete. It stated that the tax would be a one-time only tax that was intended to create an income for an emergency income, and this tax would be applied to all those individuals who have a gross equity of 22 million USD, approximately equivalent to $22 million USD. So besides all the constitutional problems and the constitutional theory problems of setting forth such a abnormal tax, we also have the technical problems of implementing such a difficult tax. How to calculate the tax was not regulated in the article. How to determine which was the equity that needs to be addressed. So they started with gross equity. So even though there was no possibility to deduct real estate or debt or anything, it was gross equity, and they gave 30 days to pay for this capital levy tax. So maybe an individual has a gross equity of 22 million, but doesn't have the cash to pay the 2.5% tax on 30 days notice. You'd have to liquidate assets and therefore reduce its equity. So this was a very controversial tax, and it radically changed through its legislative process. And now the bill that initiated as a capital levy or as a one-time only tax on the super wealthy is now a series of VAT modifications, and there's no mention of the capital levy. But it still is very weird that it's a weird way of making tax legislature whereas the deputies don't have the actual ability to set forth or to propose a bill on taxation. But the idea still remained in the Chilean subconscious. So actually, one of the presidential candidates did propose in its presidential program to incorporate some kind of tax on the super wealthy. He says this is the left-wing candidate Gabriel Boric, and he proposes that this tax will affect roughly 11,000 Chileans, so it's very minimal. But also he proposes to apply an interest rate on retained profit at the level of high net worth companies, and amend the surcharge on real estate that I already mentioned. So the idea within the Chilean subconscious and in the current political scenario of Chile is, and particularly within the Constitutional Convention and the left-wing candidates, is to try and grab some of the wealth taxation and try to modify and introduce some sort of rules to try and catch this high net worth individuals' wealth. Besides that, and when we're talking about wealth management taxation, and we move forward to what we're speaking about, CFC rules. So Chilean CFC rules were introduced into our legislation in 2014. This is it's prior the final report on BEPS Action 3, which was in 2015. So, but since Chile entered the OECD in 2009, therefore we were kind of in the trend of how CFC rules were being discussed within the European Union and in more advanced economies. So we're actually the development of Chilean CFC rules is not so new. We do have an updated rules on tax credits, on foreign tax credits, which are generally very, very good. We have wide possibilities to credit in Chile foreign taxes, both from countries that have a tax treaty with Chile and from countries who don't have a tax treaty with Chile. And the only differences are those income that the kinds of income that will be allowed to be deducted for the taxes paid abroad. The CFCs also are included within these, so the tax credit mechanism also applies for when the CFC rules are applicable in Chile. And the CFC rules also consider that in Chile does have a very broad network of tax treaties. I'd say it's one of the biggest ones in Latin America. So it's it's quite relevant to see that we do have a very interesting foreign tax credit system, as well as a very broad network in Latin American standards, let's say, of tax treaties. And our tax networks has been recently updated by the application entry into force of the MLI. So this is actually Chile made its deposit on November 2020, and on March 2021, the tax conventions that I am listing here are the ones that are currently already modified by the matching system of the MLI. But there are some of our tax treaties that are spending the deposit of the ratification instrument, which is the case of Argentina, China, Colombia, Italy, Mexico, Peru, and South Africa. And we also have some tax treaties that are not affected, either because they were not included as covered tax agreements because they're fairly new, such are the case of India and the United Arab Emirates. And the case of the USA, because the tax treaty is not in force as of now. And we have other countries that did not sign the MLI, which is the case of Brazil. So actually, our tax treaty with Brazil is yet to be updated by the. It's not going to be updated by the application of the MLI. So the picture of wealth management in general in Chile is that we do have, since the social uprising at the end of 2019 and the constitutional process and the pandemic, we've seen in practice how some domestic capitals have been eradicated abroad. This is mainly due to the I'd say the weird political scenario that we have. We expect to come back to normal and to be a more tranquil, let's say, a more tranquil economy. But we're still in a process of being in the midst of a very debated presidential election, and within the process of a constitutional reform. So that may impact in practice what wealthy individuals are doing with Chilean wealthy individuals are doing with their wealth. So I give the word to Tiago. So what's the situation in Brazil?
Thank you, John. First of all, thank you all for the invitation. Well, I am trying to figure out when I has received this invite which kind of message I can share with you about Brazil and how this affects the wealth management, etc. Well, I will try to talk about the last topic that I have made here. Of course, maybe for the Brazilian tax attorneys is not so new, but for a lot of people, this should not be. Well, Brazil is not a good place to put a holding company, and of course I will explain why is that. It seems that maybe for the last 5 years, I think we are seeing a turning point in terms of administrative jurisprudence about the CFC rule. The CFC rule that we have here in Brazil is not a through the CFC rule, but it is what it is. It is what we have here, which is the Article 74 for the specific provisional measure that we have this measure has been changed a lot, but the whole idea is still the same. And the last jurisprudence that we have in administrative court understand that the Article 7, what we call profit in the Article 7 is different from which are calling profit regarding the Brazilian CFC rule. Why? Because of this, there is no conflict between the article of the model that we have here for the double tax treaty that we have signed in Brazil and the other countries, and this includes Chile. It's not a private information, so we have received a decision like this maybe 1 year ago, I think, as far as I remember. And this is what we are facing in the administrative level. We don't know yet how the judicial courts will face this new argument from the tax authorities that, well, the profits are different. But believe me, there is only one profit, profit generated abroad by a company which a Brazilian parent company owns the shares. And for me, it doesn't make sense differentiate such profits in terms of taxation. For me, it's just one profit. Well, this is something that we have been following, and we hope that Brazilian judicial courts doesn't make the same mistake that, in my view, the majority of the administrative members from this the CARF and the Câmara Superior de Recursos Fiscais are understanding right now. The second topic regarding this taxation of profits, the foreign profits, is how Brazilian tax authorities are managing this issue, because it seems that they, at least for Chile's situation in specific, they don't realize, or they don't like to take this in consideration, that when a Chilean company decides to distribute its profits abroad, they have like a surtax. So the nominal rate of 27% in Chile raises to a actual income tax rate of 35%. So based on that, if they are considering that the profits is already idle for the shareholder, why they doesn't take in consideration, they don't take in consideration that the actual rate is not 27, but 35. Why? Because in this situation, there's no tax to charge here in Brazil. So in the end of the day, what I see is it's like a no-sense discussion here. The first of all, they try to differentiate a profit from derived from the foreign company from the profit generated by the equity, net equity variation in Brazil. I don't know. It's really hard to understand this argument from the tax authorities. And aside of that, which is like a, in the end of the day, is like a theoretical discussion. We have a practical discussion. A profit that are generated in Chile and is already distributed to a foreign company is not taxed at 27%, but 35%, which means that any kind of profits generated and distributed in the understanding of the tax authorities in Brazil should not be taxed in Brazil at any rate, at any time. But considering that we are not in this, we don't have this kind of understanding from the Brazilian tax authorities. We have to face a different discussion, which is, okay, let's suppose that I have to pay this foreign profit here in Brazil, but maybe in 2 years from now on, the Chilean company really distributes, monetize this profit, sending money to Brazil. So we have already taxed this profit in Brazil, but we received the money just now, and we have this surtax implication in Chile. So how we will offset this once we are not talking about the same tax and the same moment? Because I think that's the real deal that we are facing right now. We don't have we have a timing problem here in Brazil, because created by the tax authorities when they decided that the profits, once they are booked in the financial statements, they have they must be deemed as idle in terms of taxation here in Brazil. It's something that it's not only for me, I think, but for any tax head of tax is responsible for operations in Chile, who parent company is located in Brazil. Probably we have the same discussion, and we are suffering the same no sense behavior from the tax authorities, which drives to the third topic that I have put in this slide deck, which is the Brazilian tax reform. Of course, please realize that I just mentioned is not really, it's like a joke, but we may face like a triple taxation on dividends on this situation once that if Brazil passes this tax reform, which is not so clear at this moment, once they are wondering to make this tax reform takes in force for next year, and of course the government has failed on that, and probably if we have something, probably we are only have to worry for 2023 at this moment. But once we are talking about the taxation of dividends here in Brazil, and we don't know yet if this will be really, and how much this percentage of taxation on such profits distribution. But let's suppose that we're talking about something between 10 and 20% of the profits distributed. So we have a surtax in Chile that we honestly, in the practical way, we are not at this moment able to. We are not able, but we cannot assure that we are able to offset the surtax against the income tax that we have already paid for this profit generated abroad, and considering the test of the tax reform bill, there is no differentiation between the profits that a parent company Brazil will distribute abroad regarding the profit that already and really were generated in Brazil, and the profits that are derived from profits generated abroad. So if you have like us, we have and then this is a public information. I don't feel any trouble with share this information with you. So we have foreign shareholders in Ball Corporation in Brazil, which are the shareholder of the Ball entity in Chile. So we don't know, and for me, it's like a triple taxation problem that we have. If we are receiving this surtax in Chile, then we are not able to offset this in Brazil. Then when we have decided to distribute the whole profits here in Brazil, let's suppose that. And in this situation, I have, in case of tax reform scenario, I have to withhold taxes from profits that were already taxed in Chile and in Brazil at the same time. So that's my, for this moment in terms of the tax reform, I see this triple taxation scenario that is not really clear for me. For me, it's like a treat that we have, and probably considering that we don't have any a technical discussion about this tax reform in Brazil, this scenario could be treated like a really high risk in terms of having or still having a holding company here in Brazil. That's why for all these factors, I would say that, and I don't have any doubts in saying that Brazil is not a good place to holding companies at all. Thank you.
Jonathan, are you done as well? And do you have any comments?
Yes. On a final note, and just on a happier note, maybe, I'd say that taking what we've discussed with Thiago, maybe a little bit backwards from the Chilean perspective, I'd say that in Chile we have a clear set of rules regarding the application of foreign tax credits, and we do have a very broad network of tax treaties, which have traditionally meant that wealth management taxation is it's very certain regarding offshore companies in Chile, and that's like the bottom line from the last let's say 10 to 15 years in Chile. But if you take a zoom in and zoom in into the last 2.5 years since the social uprising in Chile, like the cake flipped, and we're just seeking taxation on wealthy individuals and on wealth in general. So I'd say we do have like maybe a more unstable political scenario, but it is relevant to take into account what we do have built in the last since the last tax reforms in Chile regarding taxation of wealth management and our broad network of tax treaties. So just to end on a happier note, I think when the dust sets and we do have more certainty, I think Chile will still be a very an interesting place, just because of the tax certainty that we have given taxpayers historically, let's say.
Historically, let's see the
future.
For the best.
If you allow me just 1 minute remark, it's because just to wrap it up, it's interesting when we see all the world discussing minimum tax, and I think here in Latin America, when I see Maria talking about 97% of tax burden, when I see Thiago talking about the triple taxation, Yeah, well, in the Brazilian tax reform, I see that our problem and our concern in the future should be with maximum taxation. Yeah, in our currency, because I think we're at a closer level. So I think the agenda would be, do we really want all these taxes? Because I mean, the state, unfortunately, is not giving the population enough credit for the amount of tax. And I think Latin America is getting poorer and not richer. So that should be the concern, not with minimum tax, but with maximum taxes, at least from my perspective. But I think we had a great event today. Thank you all. Thank you on behalf of YIN Chile, on behalf of YIN Brazil, all our audience. And Eduardo, Maneira, if you could close the event, we just run out of time, sorry. It would be great to have all of you discussing more. And I think we can already schedule another event within Chile would be a great pleasure. So we can still talking because this is a very hot topic. Thank you all.
So, João, I just love the comparative approach made by Maria, Jonathan, Thiago, and Paulo. Certainly, I've learned a lot. And as neighbors, we are like 1-2 years away from the movement of each other. So, and we certainly have some lessons here to reflect and debate on. I'm sure that many of the legislative bills that Maria and Jonathan brought to us here, we will be discussing in a few months in Brazil. I'm certainly agree with you. We have to discuss a limit, not a minimum. But thanks everyone. I hope the audience have learned as much as I did. And I would like to thank you again, João, for inviting me, giving me the honor to chair this panel, and see you then in maybe do you have an event that you want to make it marketing about, João?
I think now only Christmas and New Year. That's the major events we have.
Everybody,
Maybe we could have meet in person next year. Fortunately, we hope.
I'll be looking forward to it. To visit Maria and Jonathan in Santiago. So, well, I wish you all Merry Christmas, a Happy New Year's Eve, and bye-bye.
Bye-bye. Thank you all.
Bye-bye.
Happy holidays.
Bye.
Bye-bye.
See you.
Thank you all. Bye-bye.
Great event, guys. Ciao.